On the phone here, we have Michael Burdick, good friend from Loan Depot. Michael has been doing mortgages for about 14 years. Is that right, Michael?
Not quite that much.
Oh,
About
okay. Sorry. How long?
about 11 years.
11. Okay. So just a few years short of 14. So awesome. Michael is with Loan Depot. He's a senior loan officer there. And in full disclosure, refied my house just a month ago. It was an easy, seamless process. But before we made that decision, we kind of mulled over a couple of things. So Michael, welcome to the show, and tell us what is something that we don't know about you.
Wow, put me on the spot. Well, I guess if you look at my Zillow profile, you'd know that I'm a pretty passionate skier. I've lived in the Northwest my whole life, and I actually volunteer ski patrol at Crystal Mountain. But this year I'm not because I had twins 3 months ago. So I've been clocking lots of hours in this bonus room here between feedings and doing mortgages.
You got your hands full, you and your wife. Absolutely. Well, congratulations on that. All right, so let's jump into the questions that we have today. First off, what reasons do people kind of mull over the reason to refinance?
Well, there's lots of reasons to do it, and then maybe not do it. And I mean, the biggest thing is, you hear in the news that it's record low mortgage rates, so that inclines you to start researching online and talking to people about getting referrals on who you can speak to. And when I have a client, we don't just dig right into the application. Usually we have a consultation and we review, okay, what are your goals? What are your long-term plans with this property? And then other things in your life. Are you planning to move or start a business? Or, there's lots of things that will help us determine if refinancing for you is going to be a good idea. And then the most popular reasons are to save money per month. Cash flow is huge. And that's across the board, across the country. That's most people's main goal is when they can lower their interest rate, they're lowering their cost to borrow, they're going to lower that mortgage payment. Other reasons would be, I'll talk to some people and maybe they've lived in their house 2 years and they know their rate is higher than market and they say, I'm comfortable with the payment. I don't want to go through that process. So then I'll tell them, well, maybe we can lower your term. What if we kept your payment the same, but we can knock off, maybe you started at a 30-year, now you're 2 years into it. Maybe I can get you a 25-year or a 20-year for relatively the same payment. And then they're like, yeah, that makes sense. And maybe they still want to sell their home in 5 years, but then when they go to sell, they're going to have more equity for proceeds for their next move. So a mortgage is a really strategic way to have like a forced savings account. We all have savings accounts, but you can throw it into your checking whenever you want. A mortgage is an asset that you're going to have that is appreciating over time, and you're going to have those proceeds when you ultimately sell or retire or whatever it is. Other reasons would be to consolidate high interest credit card debt. So sometimes we'll do cash out refis where we're including other payments to maybe raise your mortgage payment, but overall, borrowing at rates at 3% or sometimes even lower into the twos is amazing compared to if you have high credit card debt at 18%.
Mm-hmm. So why would somebody, those are all really great reasons to do it. Why would somebody hold off?
Yeah, I can go on and on about reasons to do it, but there are also reasons to hold off. And I mentioned some earlier, like, are you going to be moving soon? We can structure refis that don't cost really anything out of pocket. That just means you're not going to get the lowest payment. If you lower the rate to current market, or sometimes you can buy down further, that's going to have cost to it. You're going to recoup that over time. But if you're only looking to live in your home maybe 2 years, or it might not pencil out. So that's part of the cost benefit analysis that we'll do together when we review on that initial consultation and see if it's going to make sense. Other reasons, COVID is a kind of a crazy time. Are you a business owner? Has that changed your income? Are you furloughed? Are you in a forbearance program that has been offered you by the CARES Act, which is through COVID relief? What else?
Those are
Yeah.
disqualifiers right? I mean, it being in forbearance would disqualify somebody from being able to refinance, right?
It does in the short term usually. I mean, I feel like guidelines are changing constantly on it just because it's all fluid, and
Yeah.
CARES Act was basically put out there by Congress and mandatory to be offered to every person that has a mortgage in the country. So a lot of people just opted in before the investors of Fannie Freddie could even write their guidelines yet. So it depends on the program that you get enrolled in, whether you're deferring it and have to pay it at the end, or if you're paying it on the end of your term. Like there's different rules on that. So
Okay. So interest rates, they where the, roughly, I mean, obviously there's a lot of factors, but if you're to, I heard that the conforming loan limits increased. Is that right?
correct. So everything after January 1st, right now we're max at 741, 750, and then they're going up to, I'm not even going to say because I didn't write it down, but I think it's 765 or 775.
And that is what that's like. Conforming loans are the sweetest possible at 20% down or 20% equity, right? So from a refinance, conforming loans would have the best baseline rate, not factoring into anybody's credit or anything like that, but conforming loans. Am I right on that?
Right now, yeah. And it's not always like that. Like over the years I've been doing this, sometimes jumbo rates have been better than conforming. But right now, jumbo, especially during COVID and initially in COVID, got shut down, and they've gotten more strict as far as guidelines for reserves required, and looking at income more closely and things like that. So those rates are a little bit higher just because the investors have pool has gotten smaller on the backside. But yeah, I mean, conventional
So
rates right now are really good.
if you had just like the sweetest, easiest A plus credit, a conforming loan limit, 20% down, what rates are we at?
Purchase, you'd be looking probably at the mid twos. Refi, you'd be probably mid to higher twos. And that's today. So don't quote me.
Yep. Yeah, no, of course. And that's today. And just so you know, we're recording this ahead of Wednesday. So I just want to be clear. And it's an important thing to say because, I can't tell you how many people, when they're refinancing or purchasing, it's like, well, I called this lender and I got this rate, and I called this lender and I got that rate, and I called this lender and I got, where lenders vary is on fees and costs and service. Rates are all bought at the same place, almost at the same time. So if in a day time, all the information's there. So I don't want to spend time on rates, but I would, we've got a few minutes left here, and I would like to know that if you are in the process of refi, when is the lock? I mean, what's the idea of locking in the rate? When does that happen, and when should somebody lock?
Yeah, so that's a good question, whether it's a purchase or a refi. I mean, on a purchase, we need to be under contract. So a lot of times people will do their application with me and say they're looking at homes and think that they're locked, but no, because we need the exact terms of what we're going to be locking and a close date, et cetera. Mm-hmm. On a refinance, where a year ago I could close a refi in 3 weeks, no problem, but right now they're just taking longer because this is the biggest refinance boom that's ever happened for a lot of reasons. Excellent rates, great equity, so people are getting the best terms that they've ever had, and that's why it's so popular right now. But when you should lock is really a conversation you need to have with your lender. I look at the market closer than most people because I subscribe to servicers that are experts on that I get notifications daily. I get a morning video sent to me. I know what's going on every day. And, whether it's the jobs report coming out, whether it's the stimulus that Congress is passing and Fed updates, and there's just more that you even want to look into. So it's really a conversation of talking to your lender, seeing what lock options they have. Like, can you lock for 30 days? Can you lock for longer? Can you stay floated?
How long can you lock for, just on average?
Purchase, I mean, standard is 30, but we can do longer. And then, like, I have a pre-sale under contract right now. We're going to do a 6-month lock.
Oh, wow.
They're saying, well, I don't know what rates are going to do. So there's a slight cost to that gets built in, but they're wanting to do that to protect themselves, which is really smart because they're so good now and we don't know what they're going to be in 6 months.
So let me just put a hold on there. This is actually some good information. Is if you're out there shopping for a house, new construction is one of the best ways to go right now because, it's still competitive, But if you have a home that you have to sell and you need to buy a home, you can buy it, and then you're going to have several months of runway before that you need to get ready to sell your house. So it's kind of cool because you don't have to be contingent. But what you're saying is you have a program that I can lock today at 2.5%. Let's just say hypothetically that home is below the $900,000 range. Put 20% down, and I can lock it until it's completed, right?
Correct. So there's we lock it slightly higher than current market, and that's the cap. And then if rates skyrocket on you, you're protected. But then if rates get better before closing, we get a float down option.
That's cool.
So it's a really cool program, and it's for somebody that wants to play it safe. It's kind of like an insurance policy on your rate, and protecting yourself, and you know your budget up front, and you know that I don't want it to go higher than this. It's a great way to protect yourself. So.
Okay. All right. Well, we're about to finish up here. And I just, in conclusion, when you're thinking about interest rates and where they're headed, just give me a quick couple of seconds on where you think interest rates are headed in the next 3 to 6 months.
Again, anything can happen. I mean, I think the recovery that we're having in this country is not a quick recovery, but the vaccines are definitely going to help and hopefully get us out there. And that could, as the economy opens up, and we're all going to go crazy traveling and going to every restaurant and movie theater we can once we're able to. I mean, mortgage rates will eventually go up. I mean, they're being held down by the federal government, basically, and the Fed. And so I think we don't know that answer, and the safest thing to do is, if you can, look into your options now. So give me a call.
Awesome. Michael, thank you so much for coming on the show today. We appreciate it. All right.